Hello. Welcome to the second day of the midnight. I didn't realize we'll be the first talk after breakfast. So hopefully everyone's well fed, has had enough coffee to welcome Vibhu on stage. So before we get started, I know you were one of those cats who was prop catching at 13. So you know the domain industry. But I don't know if everyone in the room knows you. You want to introduce yourself, what you do, how you got into domaining, and yeah, like where's the journey now?
Yeah, more of a hobbyist than a domainer, let's say. Yeah, actually, the first thing I ever did in with the internet was that I fell in love with was like trading, buying and selling domains. Back in the early like 2000s. Yeah, no, I now I'm at Solana Foundation. Solana Foundation's the kind of like ecosystem steward for Solana, the Solana network, which is one of the largest crypto networks, the most used blockchain in the world by far, and by close. Uh, our token is SOL, and we're like top 5 or 6 by market cap. Yeah, we did something together.
Yeah, no, I'm very excited about what we'll be doing together. We announced the DATs yesterday, and we'll get to that in a second. But let's talk a little bit more about Solana. How many people here have actually traded on Solana? Like a show of hands. Like, that's a pretty good, solid crowd. So, I'm a big fan of Solana. But, 3 years ago, if you told all of these guys, let's put your domains on Solana, I don't think that'll be a good reception, right? People were like, it's the meme coin chain. But now it's like completely different. Like I wake up every day and there's like a new institution on Solana. So what actually happened? What like changed? Why is Solana like literally the de facto chain for every institution to come on chain?
So Solana was founded in like 2018 and went to mainnet in 2020. And when the first NFT boom happened on Ethereum, the gas prices on Ethereum were really high, and that moment people were looking for alternatives, and Solana was probably the most credible chain that had a very low cost to transact and scalable. And a lot of the products around Solana include the wallets like Fanta. Raise your hand if you have a Fanta. I'm curious. Yeah, that's pretty cool. Like we're just better at their Ethereum equivalents. I know you guys were setting up people in MetaMask and stuff. I'm so sorry that you guys are doing that, but yeah, I don't know. Like that moment, like created a lot of momentum for Solana, and a lot of builders started to come to the chain. We went through a bear market, and then when the 2024 kind of run up happens, Solana was kind of sitting at the top in terms of real things happening on the network. And yeah, for the last 2 years, we also built some pretty strong institutional side. We're just behind Ethereum on stablecoin TVL and RWAs, real world assets. We have today, maybe we host $50 to $60 billion of assets on the network. About a third are US dollars. With RWAs, we have $2 billion. That's like treasuries, stocks, things like that.
Yeah, by the way, if you're getting a MetaMask wallet, do not get a MetaMask wallet. We do offer Doma wallets, which includes Solana wallets offered by Privy. I know like Privy has been like super bullish on you guys. I do think the experience of trading on Solana was what attracted me to Solana, like you said, right?
Yeah, we've gone in the last 5 years and about $3.5 trillion of trading activity. And each year last year we handled $10 trillion of stablecoin transfers as well. We're actually using blockchains to set money around the world. This is pretty cool to see happening.
Yeah. Yesterday we shared a slide. We were like, oh, we've done like $80 million in volume. And like, Fred said like, oh, it's inning one. Listening to the T's, I feel like we're in inning like 0.001 here.
What's that?
Like we're like so like far below, like when it comes to volume. Where do you see this going? Like, do you see like the volume accelerating this year? How do you see RW adoption coming more off Solana?
So A couple numbers to think about. So we every day is about 100 million transactions on the Solana network, and for context, that's if you added up transactions from all the other public blockchains and then you combine them, Solana would still be like 2 times more than that. That's where Solana is today. If you look at trading volume on Solana on a daily basis compared to like the Nasdaq or the NYSE today, we'll be between 20 and 25%. So there's still a lot of we're still definitely not there's a lot of work to do there. If you look at like derivatives and like options markets, things like that, we're not even 1%. So yes, there's a lot of activity happening, and when you compare it to crypto stuff, Solana is really far ahead. But from a global finance perspective, it's pretty early still. Yeah.
But even with crypto, why do you think Solana has consistently grown? Like, what is it that attracts, but not just attracts, keeps the capital, right? Because I look at other chains, there'll be like a boot cycle, volume's gonna get rich over there, and then disappears in like a month. But that never happens to Solana. Whatever comes on Solana, just this net additive to Solana. Why is that the case? Why is it so sticky? Why does it attract so much capital?
I think there's a couple of things. I don't think it's unique to Solana. I do think that like liquidity has kind of like an adverse effect of some sort. If you talk to traders, it cuts to people who want yield on their balances. The more liquidity there is, lending markets, the more yield everyone could get. So like things you do see kind of like a monopolies kind of form this way. There's just a lot to do on Solana. I would say I don't know if I actually kind of disagree a little bit with what you're saying. Like Ethereum, for example, has very stable TVL as well. TVL is means like total value locked. It's a very crypto phrase. Basically means like the assets under management that sit on chain. But one like Solana as compared to Ethereum is very capital efficient. You can like people use the money that they have on chain at a much higher rate than they use elsewhere. As an example, even though USDC was just like the biggest digital dollar on Solana, not the biggest, that's USDT, but they have something like $10 billion of USDC, and upon Ethereum, you might be like $50 or $60 billion. And they have a lot more TBL. Something like 55% of all USDC transactions happen on Solana. So our capital is very active. I like to think about the Solana capital base as mercenary capital in the good bad sense. Like we're always looking for the next opportunity. And so if you're building something new, you can kind of generate a lot of activity if there's something of interest there. On the flip side, you can become uninteresting pretty fast because that capital is always looking for finding a home where they can generate yield or find the next 10x.
It's interesting you bring up liquidity. Yesterday we had Charlie Noyes, who like from and he's at RC. He said that once you have liquidity, it helps grow the pie, right? And the wheels are a pretty big industry right now. But as you bring more liquidity, the entire industry starts to grow further. Almost a lot of people sitting in this room literally own like 7, 8, 9-figure domain portfolios. What does it need for them to be on Solana with this liquidity, cautionary capital? Like if I literally had $100 million portfolio, why should it be on Solana versus somewhere else? Even in terms of like earning yield or things like that. Yeah, why would that what's the risk for them to be on Solana, or what's the advantage for them to be on Solana? Because, we spoke about baskets, right? Now, if I'm basketizing, there's a single token Solana that's going to represent the whole portfolio. Why should I be using that as a domain? I think everybody in the world is basically looking for the same thing, which is to earn like a yield on their capital. And, if you leave it sitting in a bank account today, it's really not doing that much for you, especially compared to inflation.
I think the value of crypto is that you kind of can be your own bank, so you kind of benefit from all of the yield that your capital can actually accumulate. You know, stablecoin yields today could be 70%, or let's diverse 10, 15, 20% capital. We use to borrow lend protocols and bring in some kinds of DeFi strategies. Less. Yeah, I think I don't know if you're asking about the domain specifically or like the.
I feel like DeFi strategies, right? Like, like they talk about looping, but I don't know if the accused knows what that means. So what else can they unlock with their tokens once they're Solana?
Yeah. So basically, there's in a traditional capital market, if you are to when you leave your money in your bank account, right? So your bank is lending it out, and they're paying interest on those loans, and you're capturing this like some portion of that. On chain, for me, it's kind of similar, but it's all automated like smart contracts. So you deposit your capital into a contract, and that contract is lending it out. However, the underwriting is different. Like in real life, you're typically underwriting some other asset or maybe your like income or your credit score, things like that. On chains, all loans are over collateralized, so like I can only lend as much as I actually have deposited and putting in there. But the capital is very mercenary, so they're willing to, if I have a bunch of Sol or Bitcoin or whatever, I can put into a contract and then borrow US dollars against it, and then use those to trade. And people on chain are willing to pay like much higher interest rates than they are outside of that. Then I'd be using the dollars to trade or looping is when this is very Druzet, but I deposit Bitcoin, I take my US dollars as a loan, and then I put my US dollars into another, and I lend my US dollars to somebody else, and someone else borrows it, I borrow against myself, and you kind of like, basically like on chain, like the higher your journalism of this there is, so I'm not like, do your own research, but there is a lot of creative ways to do this, and if you have $100 million today, you don't know what to do with it. There's definitely like a lot of really, really awesome and interesting DeFi products, not just on Solana, but on other chains as well, Ethereum specifically.
And I know like Solana is one of the places where you can get exposure to like Anthropic, right? Like private stocks. Are there other like alternative asset types that you're excited about that live on Solana?
Yeah. So the topic is internet capital markets, which is a term that's was invented by Akshay, was the former team of the Solana Foundation. The idea of internet capital markets is that anyone should be able to invest in any assets anywhere in the world from their phone. Like that's kind of the idea. And when you think about like how actually difficult capital markets are to access, so many different ways, and how many constraints there are, this is really the white space that I think Solana is like plugging itself into. You think about stocks today. If you want to buy NVIDIA, you need to go for a brokerage account, your KYC. It trades in between, certain hours of the day. US is 10 time zone. If you're in the US, you don't even think about this. But if you're in India, you're in the Philippines or whatever, it's actually pretty difficult to go buy stocks. And like they might be trading when you're asleep. So what's happening on Solana is that we're, like taking these traditional equities, bringing them in a token form where they can trade without KYC or brokerage accounts. They trade 24/7, so you can buy and sell NVIDIA or crude oil or whatever, even after the market closes, which is pretty awesome because actually a lot of stuff happens in the markets on the weekends. Just like a couple months ago with the Iran war started on like a Friday or Saturday or whatever, and the markets were closed, but on chain you could see immediately like this huge impact on all these different stocks and oil, kind of crazy. So I think one is like we're bringing new capabilities to traditional equities. And then two, there's like this private company opportunity. Like how do you actually invest in Anthropic or OpenAI? One of the really unfortunate things about the last 20 years, basically like and a lot of this is going to regulatory, but like private companies are staying private really for a really long time. And now the gains of an OpenAI are not being socialized to the U.S. public. You cannot, as none of us here have benefited really from these like trillion-dollar companies that are changing the world that are all U.S. based. It's all that all those gains or capital gains are accruing to like private investors. It's even worse than that because the U.S. government is basically like financing this as well. But so we're paying for that and we're not getting the gains in the public markets. We're fortunate. So like what people are doing on chain is kind of fixing some of these injustices by taking private capital markets and creatively finding ways for people to get exposure. So today on Salon, you can go to Jupiter, you type in Anthropic, OpenAI, or SpaceX. SpaceX, we have something like $300 million of SpaceX equity on chain that you can trade. It's not a huge amount relative to their market cap, but if you want, you can take positions. So that's pretty cool. And then, the third level of this is like net new types of assets. So we have public equities now accessible to everybody 24/7. Private equities, then new things like we can, you can tokenize. We have a really strong Pokemon card market right now on chain. Like, I mean, it's insane. There's a company called Collector Crypts, which last year has grown to they're doing $1 billion in revenue per year on an annualized basis, selling like Pokemon cards that are tokenized the same way that these get tokenized domains. We're seeing this in like an art. Every like exotic asset class is basically someone is via dinosaur fossils on chain now. You can invest. Yeah, you can invest in like believe it or not, like dinosaur fossils are pumping like big time. It's like you should sell your domains to buy Triceratops skeletons.
Yeah, I'm ready to trade my rights.com for some skeletons.
Yeah. Oh, it's pretty cool. It's just you're seeing like this like Cambrian explosion of new types of assets that can exist because the capital markets are no longer gate kept, and they're all global. So you have just like a much wider pool of people who are imagining what things could be investable.
And actually, like, that's where we are, right? Like, today, there is no way you can or I can get exposure to, like, big portfolio and domains. And that's why, like, we're very attractive to, like, bring that on chain. Because, while it sounds like a joke, but yeah, I do want to, like, trade, like, alternative assets. Like, domains should be just as liquid as Anthropic.
Yeah, and I think the phenomenon, and our thesis is, like, basically every asset will eventually be on chain for sure. But it's not just about like investing and trading and things like that. It's we have the industry term is like composability, very nerdy crypto term. But like the idea is that the actual token itself is like a standardized thing. It's like an electrical outlet. Like if everything plugs into the same outlet, it's very easy for people to make things that plug into it as well. And this is what's happened. So now I have the way my US dollar works, the same way my Pokemon card works, and therefore these two things like I can have markets with each other, but also like if I have a borrow lend protocol for US dollars, I also have a borrow lend market for Pokemon cards or domains or whatever it is. So you kind of get like the full expression, derivatives, lending out credits, and trading just by representing this on chain. This is why the SEC has been like basically like very bullish on crypto because it's actually easier to build financial products on chain than in traditional markets. Way easier. I mean, it's like 100 times easier. And the U.S. is like leading a lot of this. So when you have a U.S. stock that can now be accessible globally. It's kind of like a asset expert story. It brings capital to our markets from other places.
Lending is a very interesting product, especially in the domain industry. Every time I talk to people, lending comes up. But lending in Gut2 is usually broken. Like if you even have like 500,000 domain names, it's just like traditional situation, right? if they were to come on chain in a basket, like I do think lending will be one of the big use cases that gets unlocked. Can you tell us like what other alternative assets have seen success like that? Like, any new use cases like lending that have been explored?
Yeah, it's not even like alternative. Like, for example, there's a market on Solana called Camino. Has $3 billion lending markets there, and they recently rolled out support for borrow lent markets for stocks. This is pretty cool because I can now hold a position at NVIDIA on chain. I'm getting capital gains on that. I have to sell the asset, and I can borrow money against that. We're trying to do this from your brokerage accounts. Like, you basically need private banking. And now all that private banking infrastructure just exists. It's just a product that I can just put the button and access those kind of like sophisticated markets through it.
For domainers, it means you could keep your portfolio, you can own it, and while you're owning it, you could take a loan against it while the capital still being put to use.
Yeah, and Europe, like I think there is like an underlying reason to do this, like which is basically tax, like different tax strategies as well. So, yeah.
Maybe switching gears a little bit, the other thing that we spoke about yesterday was AI. I feel like there was not a conversation that didn't touch AI. Export or two wasn't even started in Solana, but pretty much all volume at this point goes through Solana. How do you see the payment landscape, or in general, like the AI landscape changing? How do you see what role Solana will play, or crypto in general, as agentic payments become bigger?
Yeah, we're pretty focused on this. Both we call it users crypto terms again, like agentic payments, agentic trading. We basically I think like there's two versions of this. There's one which is like I go to ChatGPT and I ask it to send money to somebody or to like make a trade for me. How do I do that? And then there's another version which is I instantiate agents that has a strategy, or it does this thing autonomously. I think we're pretty interested in this because in the same way that like on-chain is taking private banking infrastructure, making it accessible. The fact is that most of trading in public markets today is basically already autonomous. Like you're trying to buy NVIDIA, or your counterparty is not a human. It's it's a market maker running like very sophisticated strategies, things like that. And those are that's not public either. So we think that people are going to basically just take their brain and then put it in, not even use it anymore, and just use the LLM brains to do everything in their lives. And so if that's true, that's also going to apply to finance, all financial tasks. I think we're pretty close to be at a place where I won't even, trust myself to send a wire to somebody. I'd much rather ChatGPT just do it for me. So we've been preparing for this, and we're starting to see what the impact of that already. We've done. I haven't updated in a month, but as of last month, we had 15 million agentic payments on Solana this year. We're about 65% of the market share of AIs that paying for things. What they're paying for, I think today it's a lot of developer-oriented stuff. So they're paying for themselves. They're paying for inference. They're paying for prompts. They're paying for infrastructure, developer infrastructure. And I think on the trading side, I've been running some trade bots, and these things will do hundreds of trades a week, and then they'll tell you, exactly why they did this and what they did. You kind of give it some direction, hey, maybe stay away from the meat coins.
Vibhu is saying stay away from the meat coins. This needs to go on the record.
No, I mean, because I ran one that was meme coin bot. I lost $500 at of an hour. But yeah, this it's quite interesting to see them work. And I don't really right now it's more experimental, but I think within a year or two, I made this at permissionless. I said that 99% of on-chain will be autonomous, and I think that number is probably way underrating. It's probably 100 million transactions, maybe 500 of them will be human, if that. So, I think we're getting I think we're getting to a point where vast majority of everything that's happening will be AI driven. So everyone that's building software should be like it's existential to dive headfirst and figure out how to make your services kind of work for that.
Yeah, we looked at the data. I think like almost 20 to 30% of all even site visits are AI. And this is a question that keeps coming up, right? The lazy take is that hey, leads are going to be less valuable in the age of AI. I know you've told me the opposite. Like you're pretty bullish of levies. Like so, yeah. Like why is that? What role do you think the domains or URLs or websites are going to play in the age of AI?
Yeah, at the risk of being pitched by everyone in the room, like we've spent millions of dollars on domains in the last year. Like I feel like we're buying more domains than ever, to be honest. And it is like I think it's pretty simple. Like we're building more products together. Like it's I've vibe coded maybe 25 different apps, and like most of them are like not very good. So actually, none of them are good, but and for the bad ones, you still find domains still with us. But then like with something of value, like we'll go out and find the right thing for it. And I see this happening throughout our ecosystem. We have maybe 10,000 companies that are like building dedicated on Solana apps. And everyone is building part, and everything needs a place to live. So I don't know. I'm like I would say like long term bullish. Like I think the threat to domains was more the mobile stuff because if the app's don't name thing Snapchat.com or Snapchat, what was the point there? I think if anything, like what's happening right now is bringing people back to the desktop, back to web browsers. In a way, the precaution is okay. They're going to LLM to ask them something. It's not about the domain; it's about trust. But those two things are pretty tied.
Those two go pretty much hand in hand. I know we're like coming close on time. I also wanted to like leave some time for like questions from the audience. Do we have any questions for Vibhu? Right.
What domains are you buying? You need to speak for it to me.
Yeah, I mean, I don't know. I'm like a boomer, so I like .com, but we also buy a lot of XYZ in our space. Like crypto is very XYZ central. I don't want to say we were been Adam and Demas. Like we're always out there looking for stuff, different projects. Boomer. Okay.
This guy's in my
Honestly, the problem with the GTLDs is like every single time you do one of these things, so you have to go and like get them all whitelisted, and they get blocked by I don't know. Like we rolled out an XYZ domain, and it's like actually like half the people are seeing a security warning on the browser. Like this seems pretty bad. So like if there's a .com, I'd definitely take it at the right price.
with Kate. You just answered my question.
No.
So what's the roadmap? You should say she said.
The one chart that's been up and to the right for 6 years at crypto is stablecoin TBL. We've grown from maybe 50, 20 to $300 billion of US dollars now in the function. And that's, I mean, literally charts like this. There's no interruption. That's a to happen. And for that reason, like every bank, every financial institution role is figuring out how to plug it to that infrastructure, how to issue them stable clients, how to accept them. This quote has stuck with me for a couple of years, but like one way to think about crypto is and financial products is that everyone's rushing to make their financial products stablecoin compatible because there's so many dollars in that format now. As of like 2 months ago, you can now deposit it to interactive brokers with Solana-based coins. SoFi, there's more coming here in a week. They now accept deposits, Bitcoin, Ethereum, but Solana. I would say like pretty much there's not a single bank that isn't actively working on something with stablecoins. For the underlying like crypto L1 tokens, that's a bit trickier. But I think everyone just sees a big opportunity there.
So you answered that question. Is it both the birthday says Solana based on treasury?
Sure, accept questions. Oh,
Is those Solana cryptocurrency conversion to these currency based off third-party exchanges and on actual miners institutions?
You mean, what do you mean by that?
Like this? Coinbase, Binance, just I know banks are working in their own, like versions of cryptocurrency and maybe some integrations as well.
I mean, it's well, it depends what you mean. If you're talking about non-stable coins, yes.
Yeah, not saying.
Yeah, for non-stable coins, definitely like Binance, Coinbase, OKX, etc. are like predominant. But yeah, for stable coins, I'd say like, yeah, a huge amount of that is coming from institutions. Like we announced in November, like Western Union is about to roll out stablecoin USDBT, Solana. There's if you pay attention to the categories, you have week announcements. So that's why the TBL is out. It's just kind of like stacking all these like different variants of it, and obviously Circle USDC is a big part of that as well. Yeah, I mean, there's like I would say like stablecoin and like the native stuff are like it's like two universes apart. In some way, it's like I do interact with each other, obviously on chain, but functionally are separate.
Going back to the internet capital markets, the reality is if every asset is tokenized, we're creating both stable and stable price most of the time against those assets. It's where you're going to exchange like Tesla stock with like SpaceX stock. I mean, you can, but yeah.
I mean, like yesterday, Facebook and Meta announced that there's trying creator payouts on Solana with USDC, and Visa announced yesterday they're settling $7 billion a week with stablecoin Solana based a few other chains. If you're paying attention, you could see like the industry financial industry rewire itself for now stablecoins at various speeds. But yeah, because of the Genius Act last year, somehow when I said the word genius, I saw the Genius came into view. That's Genius Bar. That kind of like opened the floodgates, and everything with banks takes like 2 years longer than with everybody else. So last year, Genius got feedback gets approved, and now we're gonna see like a huge wave of announcements.
Recently, actually heard about that. Like I think John was here from Avalanche, and I think he mentioned it for a while. Like institutions didn't want to talk to them, or the radar was like 24 to 36 months, and now within the last like few months, it's like let's do it now. Like now the question is how fast can we get stable coins, not like if we will get stable coins.
Yeah. I mean, yesterday I met like one of the biggest options trading firms in the world, and they mentioned they said that it's easier to get new crypto products regulated at the SEC than non-crypto products right now. Like the entire, I really think the entire financial, you're just seeing that to be finally rewired in real time. It doesn't look exactly the way that the Bitcoiners thought it would maybe, over the last 20 years, because stablecoins are basically like centralized. But
Composable. That's how we go.
yeah, sure. But it is happening, and I think because this stablecoins exist on the same infrastructure as all the other stuff, all that other stuff is kind of gonna benefit from it.
I know we're close on time, but maybe one last question.
Just real quick, is Solana planning to apply for an extension at SOP or Solana or anything like that?
I really talk about that. I'm not sure.
Yeah, no, I think we can. Yeah, so we will be applying for .sol in the next round. But yeah, share your thoughts, please. Yeah.
Yeah, of course. I mean, yeah, we're also like a Solana Foundation, also trademark holder, so we're protector brands. And there's like so many people building on Solana. I think it makes sense. I don't know, like, I'm not sure it would be, super hot, but we still want it.
All the domains that you buy for .xyz might be .sol on an ongoing basis.
Yeah, maybe.
Cool. I know we're out of time. Thank you, Vibhu, for coming here, answering all the questions and chatting with us. Thank you so much.
Yeah, it's awesome to be here.